The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Thank you so much for joining us for today's In It Together. We are talking about preparing for PPP Round 2. My name is Monica Gakey. I work at WH&LA, and this is our fourth installment of our special In It Together speaker series, which was activated by our board. So today we are so excited to welcome back Connie Barbian, our 2020 Associate of the Year and active WH&LA volunteer leader, to introduce today's speakers. And Connie will be back at the end of this presentation to facilitate the Q&A questions. So if you do have questions as they come up throughout today's presentation, please use the chat box on the side and enter those questions, and we'll be sure to answer as many as we can toward the end. So without further ado, I'm proud to introduce Connie Barbian.
Good morning, everybody. My name is Connie Barbian. I'm with Connect Hospitality Solutions. It's great to be here with you today. It's my pleasure to introduce today's speaker for our In It Together session. Jay Riniker is here with us today from Johnson Block. Johnson Block and Company Incorporated is a CPA firm performing a wide range of services, including auditing, accounting services, financial statement preparation, business consulting, and PPP Round 2 preparation. Johnson Block is also a valued member of the Wisconsin Hotel and Lodging Association and operates offices in Middleton, Mineral Point, La Crosse, and Viroqua. We are very grateful to have Johnson Block in membership with WH&LA and are excited to have Jake with us today to review the new round of PPP and answer all of your questions. So without further ado, we please welcome Jake.
Thanks, Connie. I really appreciate it. And thanks for having us here today. As Connie mentioned, my name is Jake Riniker. I'm a CPA at Johnson Block. I'm in charge of our business development department. And, as we're a full service accounting firm and business consulting firm as well. There we go. I want to touch on one item is that we are a believer that better data leads to better decision making. And for that, we always offer financial reviews. So if at any point in time today you find questions that are more tailored specifically to your organization, we like to look at that from a holistically standpoint with our team behind it and provide a comprehensive review. In this way, we're able to pinpoint areas to optimize business performance and back office strategies, as well to create efficiencies and streamline your processes. So if there's any questions about a financial review, we're more than willing to offer our services to take a look at a deeper dive on any of these topics. Want to start off today, though, talking a little bit more about the economic downturn and kind of how we got here. And really, these are unprecedented times, but they're not unusual times. And what I mean by unprecedented is it's unprecedented how we got to a recession. It's not unusual that we're in a recession. Since 1950, there's been a recession on average every 7.5 years, okay? The last recession was over 11 years ago. It was the longest bull run in American history. Now, it's unprecedented by the type of process that we're going about this. We're purposely trying to be in a recession. We're purposely trying to shut down the government or shut down the economy, okay? But recessions happen, they're a course of business, and they're always different. The last one was the housing bubble. The one before that was the dot-com. There was the Asian currency crisis of the late 90s. Late 70s, there was the oil crisis, right? But there's good news is that we're getting better at this as well. The economists will say that the great thing about a recession is once you're in it, you're already heading out of it. And that may not be entirely true on this one, but what I do believe is because we have acted quickly with the first round of PPP loan and now this second round, and we're continuing to be involved, we were moving through the recession at a much faster pace than what we would have without any government involvement. Janet Yellen, who is President Biden's pick for Treasury Secretary, had confirmation hearings this week. And one of the items that she discussed was that there isn't consensus from economists, but there's pretty close to consensus that more involvement is going to help. And so I would expect what we discussed today to be expanded on as long as this recession takes place. Another area is that this, as a recession, is a good time to make lemonade out of lemons. And what do I mean by that is that when business is booming and finances are booming, economy is booming, there's always areas of an organization that can be improved upon. They just tend to get put on the back burner. This really offers a time for you and your organization to evaluate some of those processes, to evaluate, maybe your culture, maybe, vendor relationships, maybe technology. And so it's a great opportunity to then come out of this recession even stronger yet by focusing on areas that get put on the back burner during times of economic boom. So to get into this first, I want to talk about the stimulus payments. This was highlighted the most, mainly because there's a lot up in the air. Was it going to be $2,000? It ended up being $600. Most people that have received or were qualified to receive stimulus payments had already received those. And the recovery rebate credit was $600 for individuals, up to $1,200 for married filing joint, and then $600 for each qualified child. Now, there were phase outs in place of 5 cents on every dollar for AGI over $75,000. That's adjusted gross income, $75,000 for single, and married filing jointly was $150,000. What's different about these stimulus packages from past stimulus packages, George W. Bush's administration had a $300 stimulus package at that time, is that these are direct credit and they are not taxable. Under previous stimulus packages, again, I believe it was $300 to George Bush, that was ended up being taxable at the end of the year, where these are not. Also, I would expect, as long as the recession is in place, as long as we're fighting the pandemic, I would expect more stimulus payments. Joe Biden has introduced a $1.9 trillion stimulus plan, and I believe there's a $1,400 stimulus payment that is being looked at or discussed right now. Whether that happens or not, I'm not sure, but if I were to take an educated guess, the longer this rolls on, the more chances for stimulus payments. The next household item is unemployment assistance. Right now, there's an additional $300 of unemployment payments per week for people on unemployment going through March 14th. Previously, under the CARES Act, that was a $600 payment. Again, as long as this pandemic continues on and we're trying to purposefully keep people isolated, I foresee there being additional unemployment assistance as well. I had heard in Joe Biden's $1.9 trillion plan, they're looking at increasing this to 400. I'm not sure if that is before March 14th, after March 14th, or even if it's happened. It is in the discussion though right now of increasing this. Also, many people are concerned that paying people to stay home is incentivizing that, and that's exactly what it's doing. I can see a position to where people are then going to get incentivized to return back to work once the economy is ready to open fully up again. So both of those items were related more towards household. The majority of the rest of the conversation we're going to have today is what's available to business owners, what's available to organizations. And that starts with the PPP. There we go. So 3 main changes for the PPP. One, it allows new applicants. So had you not taken the first draw that came from the CARES Act, there is now funds set aside for those that have not taken the PPP loan before. That could be for a number of different reasons. One, you may not have needed it at that time. Maybe you missed the deadlines. Maybe you were looking at different tax credits and decided not to take the PPP loan. And for whatever case, you now want to take the PPP loan. There are funds set aside in this latest bill. The second part is some previous participants that took a first draw are now eligible for a second draw of funding. Now, the main criteria that they have to fit within is a reduction in gross receipts of 25%. Okay, if they can show a 25% quarter to quarter from 2019 to 2020 in gross receipts, they would then qualify for a second draw. Now, there's some other rule changes as well, but if you do not meet that, you would not qualify to take a second draw at all. And really, I'm sure we've got a number of Packer fans on here, so I think this would be a good time to pick on Tom Brady. Tom Brady took the PPP loan. They're trying to stay away from people receiving the second draw that don't need the second draw. For another example, the construction industry boomed, right? Nobody knew if it was going to boom or not. And so a lot of construction companies took the PPP loan first draw and then ended up having really good years. The reason why they're saying that they're capping this now and saying you have to have a 25% decrease in gross receipts is to make sure that they hone in and really are providing funds for those that need the funds and not being as generous as they were the first time. There's so much more unknown with how this is going to affect the business community and the global economy in a whole that they were more generous up front. And actually, that's something that they learned from the Great Recession. They learned that they were not, the Federal Reserve and the Treasury Department learned that they were not quick enough to act and not strong enough to act. And had they acted quicker and stronger, we would have recovered faster from the Great Recession. So again, the first one, they were very generous, opened it up, giving money away to even those that may not have needed the money. And this time, they're taking a step back and saying, hey, look, we're going to make sure that money is going only towards people that were affected and hurt by the pandemic. And then the third area change with the PPP loan is changing some of the rules from the CARE Act. It was put out there. It was a large document, a large bill that was passed in a very short amount of time. And there was going to be areas, no matter what, that had to be either clarified or approve their positions, or just even with the amount of time that we've had to take a look at it, be approved upon. So the third element is the changes. A couple items that were not in this latest PPP round was there was no liability insurance, which was something that many were looking for. So if there was a COVID outbreak, people wanted extra protection against lawsuits. That was not in this bill. And no local or state funding was incorporated either. So move to the next slide here. A side-by-side comparison of what we received the first round versus this second round of PPP funding. The original amount was $669 billion. This one's scaled back to $284.45 billion. The max loan, the original amount that an organization could withdraw was $10 million. It's now capped at $2 million. And the max employees was 500 employees. This latest round is now 300 employees. The biggest comparison change, though, is going to be on this employee retention tax credit. And we're going to spend a couple different slides on talking about this employee retention tax credit. Originally, it could not be claimed. This latest round and this latest legislation, now you can claim it, have you taken the PPP loan or are going to take the PPP loan, which is a huge incentive that we'll look at here in a second. Some other items, expanded loan uses. So cloud computing software changes, as I mentioned earlier about making lemonade out of lemons. If you are looking to make any back office improvements, any technological improvements, payroll systems, software updates. Funds can be used towards cloud computing and software. Also, funds are now able to be used for COVID-19 protection. I was in a establishment up in the north woods of Wisconsin, a restaurant, where around the bar they had sneeze guards put up all the way around. That would qualify as a PPP loan expense now. Prior to this round, it would be used for mortgage interest, rents, utilities, and payroll expenses. So these are the added expenses now. Also, some nonprofits are now qualified, and what don't qualify are anybody that is part of a political lobbying firm or companies that have significant ties to China. And then the last bit of information is that there's $15 billion for live venues, movie theater, cultural institutions, places that are generating a lot of foot traffic that can't be open at all with major groups. So, places like the Rave in Milwaukee might be part of this. Loan forgiveness was a big discussion item. And prior to this latest legislation and the changes to the PPP loan, you could not deduct the expenses that we just talked about against the PPP loan. So you were going to be taxed on it. Now you are able to deduct those on your federal return to offset that income for total loan forgiveness. However, state of Wisconsin just came out this week with legislation on this saying you can't deduct, those expenses are not deductible on the state tax return. So that is a difference. Your PPP loan will be taxed for Wisconsin, but not federal. Also, they have created a simplified loan forgiveness form for those loans up to $150,000. So up to $150,000, whoever you worked with to get the loans, your lender, you're going to work on having a loan forgiveness form. This form is simple. It's meant to say, hey, we use these funds appropriately and sign off on it. Can you be audited? Yes. But just making sure that people are submitting these forms, it's easy to submit. They're signing off saying that they use the funds appropriately. And again, a very simple process. Above $150,000 is where it gets a little bit trickier. They want more proof, they want more documentation that what you spent the money on, or what you received the loan for is what you spent the money on. So you're going to have to show payroll documentation and non-payroll documentation related to the expenditures or expenses from the loan. Now, to receive full forgiveness, 60% of the funds must apply to payroll over the coverage period, okay? I do not foresee many organizations having trouble meeting the 60% threshold. The coverage period is for 24 weeks, up to 24 weeks. So I don't foresee this being an issue, which is good. Now moving on, and I think this is the biggest difference between the two is before the employee retention tax credits were only available had you not taken a PPP loan. Now some background on this credit, and very few people are going to be taking these credits because the criteria to meet was a lot higher. So first of all, you had to show gross receipts being 50% of what they were previous quarter to quarter from 2019, right? So a very high qualification rate. For employers that had 100 full-time equivalent employees, they could not take, they were considered a large employer, and only gross payments to employees that were eligible were for services unrendered, okay? Also, employment payments or payments to employees that were covered were up to $10,000, and the credit was for 50% of that. for the year, so a max credit of $5,000. Under this new legislation, they've changed this quite a bit. So now you can take it retroactively and prospectively. You are eligible, if you had taken the PPP loan, to also take this credit in 2020 at a max of $5,000, right? Showing that you lost 50%. Moving forward for 2021, there are a number of different changes. First of all, it's not 50% of qualified wages. It's now 70% of qualified wages. So move to the next slide here. The max credit is $7,000 per employee, not $5,000. And it's also $7,000 per quarter for 2 quarters. So the max credit is $14,000 total. Now, you could qualify for 1 quarter and not qualify for the other quarter, because qualified gross receipts must be less than 80% of the same quarter in 2019. Okay, so these offer unique positions to where you may qualify for the credits in 2020 and both quarters in 2021 and quarter 1 and quarter 2 of 2021, or you may only qualify for 1 quarter in 2021. It really depends on where your gross receipts are at. So it was easier to receive this credit in 2021 versus 2020, but that doesn't mean that you won't be able to qualify for all of them. Also, the large employer threshold increased to 500 employees. So it was at 100 employees was the large employer threshold, now up to 500 employees. So if you have over 500 employees, you only qualify for payments to employees for services unrendered, okay? And the last bit of information on this credit is it's fully refundable, meaning if you received these tax credits and you offset all of your tax liability, you were then paid out the credit. It's not rolled forward to future years. So this is a huge aspect. And again, it's easier to qualify now. You don't have to show as much of a loss. More organizations are going to qualify. If you do qualify, the credits are greater, up to $14,000 per individual. And then the last part is you can take the PPP loan and the credit at the same time, where before you couldn't. One more thing to touch on this though, you cannot double dip. So if you used funds, if you use employee compensation towards that 60% for the PPP loan, those are ineligible to be used for this employment tax credit. So there may be some maneuvering around or decision making to be had about which one you're going to take, how you're going to use these employee costs as well. The last bit of information today that I wanted to talk about from this latest legislation is restaurant aid. So business meals prior to this legislation were 50% deductible. This is directly for those of you that have restaurants, to try to encourage businesses to dine out, to have carry out, pickup, because business meals are now 100% deductible. I find this to be a unique opportunity to maybe market it to other businesses around you and let them know that, hey, you deliver or pick up anything. If you guys have restaurants within your establishment, this might be a good way to generate a little bit more business. So with that, I believe Connie's going to introduce some questions from this group here. Oh, Connie, I think you're on mute.
Okay. Just a reminder, if you have questions, please use our chat box to send in more questions. These are questions that we received prior to the seminar today. Our business year is July 1 through June 30. Are the gross wages that are to be reported to be based on January 1, 2020 to December 31? And how should we manage that?
Yeah, so it's going to compare quarter to quarter, pre-pandemic, post-pandemic. So you're going to be reviewing 2019, Q2 to 2020 Q2. So it's not based on your business year. It's going to be based on calendar year.
Okay, great. Here's another one. I understand that the 2020 gross wages plus employer expense for medical insurance and 401k contributions are added and used to calculate the loan amount. Are other expenses such as insurance liability, workman's compensation, Medicare, FICA eligible to be included in the calculation?
It's so workers' comp and any federal taxes are not used in this calculation. However, I do believe that most people are not going to struggle with getting to that 60% threshold for full forgiveness. They've made it very easy, so I don't believe that that's going to have much effect because those aren't involved to reach that 60% tailored towards employees' compensation. Oh, and Connie, Connie and I chatted just a little bit earlier about this. I believe most people are going to reach that full forgiveness. If not, it is repaid over 5 years at a 1%, right? So you can pay it all off if you want to. Otherwise, these can be stretched out for 5 years at a 1% interest rate.
So what you're saying is if a person who accepts the loan cannot meet the 60% criteria on payroll or the expenses that are associated with it that are qualified, they would then pay a 1% interest rate for 5 years on the remaining portion or the entire portion.
Right. So let's just use an example. You receive a $100,000 loan, 80% ends up being forgivable. That $20,000, so 80% or $80,000 is forgivable. That $20,000 would then be repaid at a 1% loan. So it wouldn't be at the entire amount.
Great. Regarding the employment count, do you count both full-time and part-time positions? Our hotels and restaurants have many, many part-time positions.
Correct. So it's very similar to the ACA. Actually, it is similar to the ACA. It's going to be counted on full-time equivalent, right? So part-time employees combined will equal a full-time equivalent employee. So it's going to be 100 full-time equivalent to meet that threshold, up to now 500 in 2021 to meet that threshold.
What type of backup do you need to provide gross wages? What is acceptable, and how do you report part-time tipped associates?
Yeah, so you're going to be looking at quarterly reports that you have, so you can compare quarter to quarter. That might be something that each individual lender might require something different. I'm not 100% sure on what exactly is needed, but I would take a look at your income statement for quarter to quarter.
Some of our associates were laid off for part of the year, but our business remained open. Can we still apply for PPP?
Yep, absolutely. I mean, that's really the crux of what it is. It is trying to say, hey, look, it is okay to shut down. It is okay to isolate. We are going to help you through those times while we want people to be shut down. So if you close your business down for 3-4 weeks, you are absolutely going to apply. Now, if you started a business after March of last year, then you would not qualify. But if you were in business, unless you completely dissolved your operation, which I don't foresee anybody doing that and then reopening it under a new organization, you would not have a problem if you shut down.
Thank you. Okay, so do you think the SBA will change the rules on forgiveness like they did for round one?
That's an interesting question. And namely, if I were to forecast here, if I were to try to use an educated guess, kind of alluding to what I said before, I would expect as much government involvement as possible to get us through this. So do I expect them to change it to make it harder for forgiveness? No. Do I expect them to make changes, that I'm unsure. But if there are changes, I would think it's going to be in favor of the employer, right? And I do, if I were to guess, I do expect that President Biden and his administration and Janet Yellen are going to get some more stimulus if this continues on. I think it's inevitable. And this isn't a political statement. This is more of the Federal Reserve has just learned year over year, the fastest way to get out of a recession is through government expenditure, right? And they look back at that 2008 crisis and said, we could have been quicker, we could have been better, we could have come with a stronger presence, and they did that. They did that with the CARES Act, and they're doing this now again. So do I expect more stimulus? I really do. I would not be surprised one bit.
Have filing deadlines been determined yet for PPP forgiveness?
I believe so. They keep rolling out with new guidance. They just came out with the documents. I do not have those dates on hand. That is something I can follow up with as well, though.
Great. Well, Jake, these are the questions that we've received so far, and you've been very informative. And I know that there are so many variations to this. One last question. Is there a difference in how a sole proprietor, an independent contractor, an LLC, or a corporation applies for this for PPP? Are there any other big guidelines that you can see or differences that we should know about?
Yeah, Connie, that's a great question as well. So if you are a sole proprietor, you will qualify for the PPP loan. Even if you didn't take the first draw, you should be able to qualify this next draw as well. And it's going to be based off of gross receipts. And there's a calculation, 2.5 months of what the average gross receipts would be for you. So if you did not receive the PPP loan the first time, you being a sole proprietor, which you were eligible for as well, you are eligible to receive this second round for being a sole proprietor and a Schedule C.
And a last question that just came to mind, should people apply immediately, or should they wait until the March 31st deadline?
I would now wait. I would get on it. These are, as I was saying, they're not unusual times, but they are unprecedented times, and who knows what is right around the corner. I mean, I think one of the learning, for me, what I've learned is that, this was very fluid. It moved very fast. Things change constantly. And so I would not wait for change to happen here. I would get on it right away and get in contact with your trusted advisors, your lenders, to make sure that you're, one, taking care of the forgiveness documents, and two, if you are eligible for that PPP second draw, to go ahead and get that applied for right away.
Great. Well, I would like to thank you, Jake, very, very much for your presentation today. We have your name and phone number on the screen, so if any of the individuals attending today's seminar have specific questions, they can contact you directly. Every business is a bit unique, and PPP can also be quite challenging at times. So thank you very, very much for your time.
Yeah, absolutely. Thanks, Connie. Thank Wisconsin Hotel and Lodging Association today for having me, and anybody attending. If you do have any questions, do not hesitate to reach out. I'm more than happy to get back to you.
Great, thank you.
Well, thank you, Connie and Jake, and please don't hesitate to reach out to Jake. They're associate members. They're here to help us. So thanks so much for participating today. Please keep an eye out for information on an upcoming In It Together. We have a great topic coming up. And then also, if you have not done so, please register for our Spring Symposium and Expo. We will be having a financial fitness educational session. So we'll get deeper into everything finance related there. So please check your email, our social media, or the website for more information. And thanks again for joining us. Have a wonderful day. Bye-bye.